President addresses Congress and the nation.
Every nation in every region now has a decision to make. Either you are with us or you are with the terrorists. My fellow citizens, at this hour, American and coalition forces are in the early stages of military operations to disarm Iraq, to free its people, and to defend the world from grave danger. On my orders, coalition forces have begun striking selected targets of military importance to undermine Saddam Hussein's ability to wage war.
The read we get on the people of Iraq is there's no question but what they want to get rid of Saddam Hussein, and they will welcome as liberators the United States when we come to do that.
This is the scene in central Baghdad.
Earlier today we saw this crowd, this small crowd that has swelled to this now, taking off their shoes, throwing them at this statue, which is a deeply insulting Arab gesture.
It looks like it might be coming down.
Before they started taking it.
Other estimates, such as those from the Congressional Budget Office, are lower, but all estimates agree that the cost will be at least $1 trillion, a staggering figure, and one that is very difficult to grasp.
Another grim milestone has been reached in Iraq. 5 years after the war began, the American death toll has reached at least 4,000. The military says the latest deaths occurred Sunday. A roadside bomb killed 4 U.S. soldiers in southern Baghdad, and rockets and mortars pounded the heavily fortified Green Zone.
We were used to living in the extremes. Everything I did in combat is not going to work in civilian life. Now I have to relearn again. And how do I take care of myself? I'm going to drink. I'm going to numb myself. I'm going to drink until I pass out. Some of my lowest points, I've wanted to not be here anymore. There are more of us that died by suicide in my unit than were killed in Iraq.
I just was thinking, I'm a burden on my family, I'm a burden on my wife, my kids. I abused alcohol. I've tried to find whatever way I could to find happiness, peace, serotonin, whatever I could find, you know.
After the war, at least 3 Fox 25 Marines died by suicide. And one of them is in prison for murder after allegedly suffering from PTSD.
I think the nation didn't know what to do with a fresh round of combat veterans. What's the rule book for transitioning home?
These Marines are a snapshot of an alarming reality for American vets. Just in 2019, 17 veterans died by suicide every single day. About 30% of veterans who fought in Iraq and Afghanistan have been diagnosed with lifetime PTSD. Nearly 13% of homeless adults are veterans.
On paper, it's a success. For me, it's difficult because I hold on to my friends and the ones that were killed in our memories. And you look back at the instability of what's going on in Fallujah. I'll take my friends back.
All right. Today is Tuesday, the 17th of June. This is a recap for the stock market activities today. And folks, I got a good one for you tonight. Oh boy, here we go. Interesting times, historic times. We're going to read about this in the history books. You're seeing it as it unfolds. and you gotta remember exactly where you were. Now, of course, we discussed before in previous videos that the economy and the market doesn't really care about the geopolitics. It only cares about the geopolitics if the outcome has an economic impact. And what we've seen today is the beginning step of this massive geopolitical event in the Middle East to become an economic event. And without further ado, folks, let's just dive right into it here in Focus Tonight. War. Yeah, baby. This time it's for real. This time we're in the war. So I hope all of the warmongers, the keyboard warriors, I hope you're getting your sexual satisfaction right now. Feels good, isn't it? What, porn is not enough? You gotta have war, see people dead, while you sit behind the keyboard and pretend to be tough and watch other people's kids die for nothing. And this is why I did the intro of the video. Because some of us are old enough to remember all of the lies, all of the bullshit that happened before the Iraq War. If you were criticizing, if you were asking questions back then, you were not allowed. You were treated as treasonous, as somebody who was on the side of terror. So there was this kind of group think where everybody just bought the story, bought the case, that somehow we have to adventure to some country in the Middle East, do regime change and die over there, even though there is no connection at all. There's nothing that merits our involvement at all in that particular country. But everybody was clouded by the heat of the moment. And for lack of better judgment, we've done what we've done, and you know how everything unfolded. Trillions of dollars added to the debt, which we're paying for right now. Thousands of lives lost for nothing. And at the end of the day, nothing really changed. The region is still volatile. We're not really safer from these wars. And oh, by the way, in the case of Afghanistan, the Taliban is back in charge. So we've wasted trillions of dollars, thousands of lives for nothing. And we haven't learned a damn thing as we stand tonight. So this morning when I read the headline in various media outlets that Israel was itching and racing us and talking us into, hey, Iran is about to have a nuclear weapon. It's going to happen in 2 days. Something they've been saying for decades, by the way. But we now know that U.S. intelligence says, no, they were not. They were years away. And if you've lived through the Iraq War and the horrors that came from it, you can't help but to think, we're being fooled into another, oh, Iraq has WMDs and we have to do it, otherwise we're all going to die. And we all know by now, with the tweets from President Trump now pretty much hinting that we're in the war. He said we own the skies over Tehran, moving all of this equipment to the region. It's just a matter of time. And we're talking about not days, not weeks, but we're talking about hours before we see the U.S. involvement in this war officially. And you got to ask yourself a question. Were we attacked? Did the Iranians attack New York or Kansas or Florida? Why the hell are we getting involved in all of this on the behest of a foreign nation? Something to think about. Because again, war is not a game. You sitting like a coward behind the screen and you're shouting and pounding at the chest while your neighbor's kids are going to die for nothing. Keep that in mind. On top of that, Trump today said that he knows where the Ayatollah is and he can assassinate him any moment, but he won't do it for now. So this is not just going to be an attack on Iran destroying their nuclear program, but it's also going to be a regime change project. And Axios finally admitted, you got Barack David coming out today, says that regime change emerges as unstated goal of Israel's war in Iran. And I told you that from the get-go, folks. I told you that before everybody else. This is not about the nuclear weapons program. This is about the Netanyahu doctrine of eliminating all of the enemies. That's what it's all about. It's about regime change. That's the ultimate goal. So what the hell happened here? Because Trump last week was not really warmed up to the idea of, let's get involved in this. He said, fight it out and let's see. Maybe you're ready in about a week to negotiate. Maybe somebody's going to win already. So let's watch and see what happens. But now all of a sudden Trump wants to get involved. So what happened here? We go back to the board from the weekend's video. We know that Israel did massive damage to the nuclear facilities, the military capacities of Iran. Not all of it, but let's say they damaged about 20 to 30% of those capabilities. But they can't segue and move on to step number 2, which is strike at the economic fuel, the oil and gas facilities of Iran, because that's going to upset Trump. That's going to cause the price of crude oil to go higher. That's going to be inflationary, and then he loses in the economy. So the dilemma here for Netanyahu is, how do I get to number 3? How do I go to regime change? Of course, before you go to regime change, you got to achieve number 1. You got to make sure that not just damage, but elimination of the nuclear capacity. But how can we go to regime change and skip step number 2? I gave you the options, and now we know which option is going to play out, which is Trump joins. So Netanyahu figured out a way to sell it to Trump, to say, look, if you do nothing, I got to go the full distance here. I got to go and hammer the oil and gas facilities, and it might not look pretty good for you. So how about we do this? You send your planes, your massive bombers, you take care of the nuclear facilities, and then we go ahead and assassinate the Ayatollah. And we don't have to do step number 2. A revolution happens in Iran, a new regime is installed, and everything is peaches and cream. The population in Iran will be waving U.S. and Israeli flags and thanking us for their liberation. If it sounds too good to be true, it is. I'll explain to you in a minute, but how would the involvement look like? Because we know right now it's in the bag. It's just a matter of when. If you look at the map of Iran, the most important nuclear facility is called Fordo. So if we zoom into that facility, it is buried deep, deep under the ground in the mountains. You can bomb the hell out of it, and you're not going to get it. You need these massive, almost nuclear bombs from the U.S. to do it. So what's going to happen here is we're going to have to use either the B-2 bombers or the P-52 bombers with massive, massive bombs that we've never used before, by the way, because they're almost nuclear bombs. And it could require multiple of these planes to do the job. And the likelihood is we're going to do it from an island in the Indian Ocean that we have as our military base in the Diego Garcia Island, where we station the B-52 and the B-2 bombers. They're going to fly all the way to Iran, bomb the living hell out of that nuclear facility. It'll probably do damage. And then the question of nuclear radiation, Chernobyl, a lot of things to think about here. Now, by the way, the Iranians, a few months ago, they said that they have to do a preemptive attack against the Diego Garcia base because the U.S. was stationing B-2 bombers even back then. So this is not a project that happened overnight. This has been brewing for months, for weeks now. And the deep state is already into it. They're just waiting for Trump to be on board. And he's finally on board now. And after the bombing happens, absent of course, Iran does a preemptive attack and they bomb our bombers like the Ukrainians did, that would be a huge, huge deal. But absent of that, we bomb the nuclear facility and then what? We assassinate the Ayatollah and do a regime change. And again, it sounds too good to be true because it is, and it's quite foolish. I mean, this guy been in power for years, for decades, before everybody was born almost. And how many lives did we lose because of Iran? How many problems did we have with Iran when they attacked us in the homeland with this guy in? You can't name one. So the saying goes, the devil that you know, because the devil that you don't know is what comes after. This guy's not just a president or a prime minister of a regular country, head of state. This guy's a religious clerk, Khamenei. He's sort of the pope for the Shia Muslim world. And if he's assassinated, that whole world is going to erupt on fire. If you look at the map, the Shia population, of course, mostly in Iran, but about 70% in Iraq, where we have a lot of interest. 15% of Pakistan, 15% of Afghanistan, 15% of even Saudi Arabia, 75% of Bahrain. Of course, Houthis in Yemen, 35-40%, Syria, Lebanon, Turkey. All of this population is going to erupt after killing their religious leader. Of course, at that point, Israel achieved their goals. Nuclear facilities are gone. The Ayatollah is gone. But then what if we have eruption in, say, Iraq or Kuwait or Saudi Arabia, where we see U.S. embassies, bases, personnel under attack? Not to mention, of course, it's going to activate all of the militarized militias, be it in Yemen, be it in Lebanon, be it in Iraq. And then who's going to be stuck with the mess? Who's going to deal with all of that? Not to mention, of course, that this fantasy of, oh, we're going to do a regime change in Iran and then everybody's going to support us over there because they've been waiting, all of that population in Iran, they've been waiting and waiting for us to topple the regime. Maybe a fraction. But that country is going to go into civil war again. And guess who's going to win? The same movement. And this time around, they're going to be even more vicious than before. And you could see a lot of instability in these countries like Bahrain, UAE, Saudi, Iraq. You could see regimes falling and a lot of chaos. And all of these are oil-producing nations when we talk about the economic impact. Not to mention, of course, if you assassinate the Ayatollah, bomb the nuclear facilities, there are still generals who are going to still lead that movement. They're going to start bombing and attacking at the Strait of Hormuz. So this is going to get really, really ugly, folks. And I don't think that we really understand the consequences. Some of us do, who still have the Iraq war in mind and the disastrous exit from Afghanistan, as we all seen during the Biden administration. But some people are quick to forget, just like in the market. You got a new generation of donkeys who does not really understand or cannot identify a bubble when they see it, when it's so clear, as in daylight. But rest assured, folks, I take a lot of comfort that if we go to war, at least we got the most competent defense secretary of all time. Anyways, when we look at the, by the way, I mean, the guy was skipping appearances in Fox News because he was too drunk. They had to replace him. Go look that up. But anyways, we ask all Americans, do you think the U.S. military should get involved in the conflict between Israel and Iran? Among all U.S. adult citizens, 60% say hell no. Among Democrats, 65% say no. Among independents, 61% say no. Even among Republicans, folks, 53% say no. So you got the majority of Americans here say, not in my name, not with my taxpayer dollar. I don't really give a shit what happens in Israel, Iran. We don't want to get engaged in this war. So you got to question where the president is getting his orders from, because nobody approves of this. The majority of all parties, and we don't agree on anything almost in this country. We're so divided. Every question you see Democrats, Republicans, Independents answering differently. But on this question, we're united. The majority of all shapes and sizes, Democrats, Independents, Republicans say, hell no. And we're going to say hell no louder. When we see the horrors of this war, of course, the death, it's going to be a fast operation and then we get stuck for months. But we're going to see it this time around in inflation. We're going to see it in the price of oil going higher, in the price of shipping going higher. The moment we see a battle in the Strait of Hormuz, or if we see Iran, for example, hitting Saudi or Qatari or UAE oil and gas facilities, chaos will begin. Don't forget that crude oil is one of the most shorted assets in the world right now. So we could see a massive, massive appreciation in the price of oil in a short amount of time. And you're already seeing oil tankers. The shipping costs are moving significantly higher. So even with the price of oil maybe not moving much right now in the grand scheme of things, but the cost of shipping is moving higher, which will translate to you paying more at the pump. Oh, but man, if I take my my oil from Canada or Mexico, it doesn't matter. It's a global system. Insurance charges more, and the tankers will pass that extra cost of insurance down to the end consumer. If one does it, the other will use the opportunity to price gouge. That's how it works. So we see the change in tankers' earnings. They're skyrocketing right now. And this is why today I gave you a note. I said, based on the escalation in the Middle East, I rented, keyword rented. We're not buying here because they're not really good businesses, to be honest with you. But they might catch huge momentum. So I rented some oil tanker stocks, gave you some tickers. There are many, many more. Some of them trading at like $3, $5, really high beta with high dividends. So we're going to rent them for a little bit, ride some momentum, and we'll see what happens. If the crisis deepens, then we're probably going to hold them for longer. If crisis begins to unfold and things cool down, we'll probably get rid of them. Because you have other more, let's say, reliable bets. We talked about that in the weekend video. You have ExxonMobil, you have Valero, the refiners. You have a lot of other bets that are more trusted than the oil tankers. And that leads us, by the way, if we have a spike in oil, what do we have tomorrow, by the way? I know it got clouded, everybody forgot about it because of the geopolitical news, but we got the big dog Powell tomorrow. We got the FOMC interest rate decision. Now, we all know that Powell, aka Numbskull Powell, as the president called him, he's not going to cut rates tomorrow because he was already having a lot of uncertainty about the picture of inflation in the economy because of the tariffs. And most importantly, because of consumer expectations. You see it in Atlanta Fed, you see it in New York Fed, you see it in the University of Michigan data, which I think a little bit exaggerated, to be honest with you. But the conclusion is expectations of inflation are moving higher. And 9 times out of 10, very few exceptions in history, when the consumer expects higher inflation, it leads to higher inflation. And this is why Powell is really, really careful right now not to cut rates, specifically with the tariffs that we haven't really heard the last of. And on top of that, add an increase, a surge in the price of oil, which is going to spill over all over the place in the economy. Jet fuel, etc. The trucking costs for the good, all of that's going to be passed down to you, the consumer. So that's going to also cloud the picture of inflation and the rate cuts. And if Powell sounds like he's not really certain, because the market right now is pricing in a cut for September. We're not pricing a cut for tomorrow. We're not pricing a cut for July. But if he says, look, there's a lot of uncertainty, the war, the tariffs, the price of crude, I don't know. I can't give you really my word that we're going to cut by September. Of course, he's not going to say that, but the market is going to try to decode whatever the hell he says. And if we come up with the conclusion that he's not even sure about the September cut, then we got a problem. the market is going to be upset. Now, bear in mind that with the inflation threat that Jay Powell is worried about, at the same time, we have weakness in the economy. We have recessionary wind in the economy. For example, today we got retail sales data. Month on month, the estimate was down 0.6%. We went down by 0.9%. So there is inherent weakness in the economy combined with a lot of expectations of inflation. And that's not a good combination for a Fed Reserve chairman. You don't want to be in that situation because you can't cut, you can't hike, you can't do anything really. Now, the other thing I want to show you, because the bond market is going to be perhaps the most important market to watch in tomorrow's session, aside from crude oil, of course, because of the geopolitics. But this might look a little complicated, so I'm going to simplify it for you. In red, you got asset managers. In black, you have hedge fund managers. And usually the two go against each other because hedge funds different from regular asset managers. And here we're looking at their 10-year futures equivalent. We talked about the 10-year bond. So usually when we see one of the lines stopping and the other bottoming, and they're beginning to move in an inverse manner, that signals the end of a move. So in the year 22, when we began to see that black line going down a little bit and the red line moving up, that was pretty much the bottom of the market. As the red line crossed the black line, we've seen what? We've seen the beginning of the rally, the beginning of the mania. What are we seeing right now? The black line is perking up, maybe bottoming, and the red line may be topping. If that is the case, then are we closer to a top in the market? We begin to see these dynamics changing. Or we see the hedge funds reducing their exposure to 10-year future equivalent, and we see asset managers increasing their exposure to the 10-year future equivalents. If that is the case, we have a top in the market, and we're going to head down perhaps in a big way. So keep that in mind. Now, before we move on to the market info, let's do the morning brief, because today, see, the technicals do matter, folks. I know a lot of folks say, oh, but the market doesn't care, but you have to read everything. That's what I do in the morning. I read everything. I go over all kind of charts, indicators, news, everything. Psychology, I try to decode it, the zero DTEs, I try to read the market maker's mind based on the data, aka the mechanics. Everything matters. But unfortunately for some of you, just look at the tape and act like little girls. Oh, but the market doesn't care, man. Hold your horses and shut up. I'll explain everything for you. But, morning brief, we talked about the VIX 2 hours chart. I showed you this chart right here, suggesting that the VIX is probably forming a cup and handle pattern. It's about to pop. It's about to secure that 20 as support. And once we hit above 20, that's your indicator that you need to hedge, because that's your leading indicator, or close above 20, that we're about to reverse in the market. Here's the update for you. You can see a big pop in the VIX today. We closed well above 20. It looks to my eye that we have another surge coming. And Monday, when of course we got all of this geopolitical news and the market went higher instead, when everybody was crying, oh my God, see, the market is going up again, babe, doesn't care. Because some Wall Street propagandists in the journal came out and said that Iran is urgently signaling that it wants to end hostilities and restart nuclear talks. I mean, the headline looks like bullshit to begin with. You don't have to be an expert to realize that this is fake news. This is propaganda. And it's meant to prop up the market so the funds can exit and change their positions on Monday. And that's what happened. We know this headline is wrong because Iran is not negotiating, didn't want to negotiate or surrender, and Trump was not interested in negotiations anyways. So in yesterday's morning brief, I gave you that I'm seeing the USS Nimitz moving to the Middle East. All of this is building up for a war. So what I'm going to do is, we did the SPY 601, the zero DTE puts. It didn't work out. I mean, it did, but later in the day, so it didn't make a lot of difference. But I said, look, what you want to do is do the inverse. That's why I showed you the inverse charts to watch edition. You got to inverse the charts, and the things that are going down on Monday are the ones you want to buy the dip in, and the stuff that is blasting higher on Monday is the stuff that you want to fade. So we added to USO. Today, USO popping higher. Added to GDX or gold is not moving much today because we have a little bit of short covering in the dollar before the FOMC. But if Jay Powell comes out and crashing the dollar as we anticipate, because the dollar is only going to move higher if Jay Powell talks hawkishly about the monetary policy, which I don't think he's going to do. So if the dollar goes down, then gold back on track. And I said fade the rips and the highest movers today, especially in the cyclicals, the airlines, the casinos. You see all of them down today. The airliners are down 3, 4, 5% apiece. So sometimes you gotta have some balls and brains instead of just bitching and whining and being reactive to whatever the tape shows. Fundamentals, technicals, mechanics, psychology, all of these matter. You gotta consider all of these factors before you come to a conclusion about what the tape is doing, what the chart is doing, what the market is doing. Anyhow, let's add to this conversation, folks, by revisiting the market activities today, beginning with the closing of the indices, and here we go. The diamonds in the red, down by 299.29 points, or a loss of 0.70% or 0.7%. The Nasdaq also in the red, down by 180.12 points, or a loss of 0.91%. The SPY Spider, which is pretty much a tech ETF right now, cannot escape if the Nasdaq is in the red, so it is also in the red, down by 50.39 points, or a loss of 0.84%. The leading indicator of the Russell 2000 small caps is the leader to the downside today, down by 2.22 points, or a loss of 1.05%. Sectors. Energy is the only positive one, and that's it. The rest getting hammered. The laggard of the day is healthcare, because healthcare got a double whammy today. On one hand, you have Maha, RFK Jr. He wants to buy big pharma ads on TV. I say good news. Of course, bad for the stocks right now, but to be honest with you, they spend a lot of money on this crap commercials that, I mean, you're selling drugs here. Why do I see pictures of old ladies gardening, having a good time, playing tennis? What kind of bullshit is that? I don't want to see these ads. Let the doctor do the prescription. I mean, you have drug dealers, aka doctors, whose job is to push the drug and the medicine to the patient and make the drug company money. What do you need to advertise for? I think in the long run, it's a positive for these big pharma companies because they're not going to spend a lot on ads. But right now, it's looked at as negative. The other whammy is the Trump administration came out today saying that we're going to announce the big pharma tariffs really, really soon. So until we know what the tariffs look like, because we could see the possibility of buy the news, by the way. Sell the rumor, buy the news, if the tariffs rates are not as bad as we anticipate. But you're never going to know that until you have the rates out. So we have to wait and see. And that's why healthcare at the bottom of the pack. Looking at the breadth, not looking pretty good here, but not excessive to the downside to the point where you have to have a rebound. Because we have in the NYSE 25% advancing, 74% declining, in the NASDAQ 27% advancing, 71% declining. Had it been 15% advancing, had it been 80% declining, 85% declining, I would have said, okay, we're really, really oversold. The market has to rebound. Any hint of good news, the market will take it as an opportunity to rebound, but we're not quite there yet. We could see another ugly day before we get a rebound. Looking at the heat map, not a lot to look at because the majority of the map is in the red. If you love red, this is a beautiful picture right here because we see everything down. The big caps are down, the cyclicals down, the majority of the technology names are down, big pharma, banks, industrials, everything is down. Even some of the defensives and utilities, in consumer staples, everything's down. What's moving higher? Energy, because if energy prices go higher, well, Procter & Gamble is not going to do pretty good. PepsiCo's not going to do pretty good transporting the energy. The utility is not going to do pretty good paying more for the cost of the energy. So even the defensives become less defensives. The majority of the pain was in the risk-on segment of the cyclicals, such as the airliners, the hotels, the casinos, the retail stores. But we've also seen pain in the classic defensives that we talked about in the stagflation portfolio. So this is, what you're seeing right now, this is a geopolitical formation in which we see energy leading the pack. We see the defense contractors like Raytheon, LHX Harris, Northrop, Lockheed Martin leading the pack. What else? Nothing else. Maybe cybersecurity. You see Palo Alto, you see CrowdStrike, Fortinet going higher. So maybe cybersecurity, because there's a lot of cyber war going on in this conflict right now. So I think cybersecurity is being treated as a defense play among technology. There are some exceptions in tech like ARM and AMD. Of course, AMD got a $10 billion deal with Saudi, so we see a little bit of short squeeze / gamma squeeze in AMD, moving it higher along with Micron and ARM. But those are the exception. The rule is the majority of chips are down today. You got Visa rebounding in the financials, but Visa was down big on Friday's session, so it's just an oversold rebound. What worked today, defense contractors, and energy. That's it. Of course, we have another massacre today. I don't know if you noticed or not, but solar stocks were down big. I mean, we talk about Sunrun down about 40% today alone. Why is that happening? Because we have the bill. See, the bill is important. We're not talking about it right now because of all the chaos that we have in the geopolitics, but the bill is important. It's going to take front and center again because they have to tweak the bill to reduce the deficit. And the cutest way they came up with, the Senate, of course, is to reduce some of the renewable energy incentives, which is just a drop in the bucket, but it is really, really negative for solar and EVs. So you saw solar EVs getting absolutely brutalized today. When you look at the heat map for the ETFs, defensive, so we see TLT bonds going higher, but again, we'll see what Powell does, because if the U.S. gets involved in this, you're going to see sell America trade again, where our bonds not going to be safe anymore. Our dollar's not going to be safe anymore because we're going to rack in more debt. So I think it's a rebound for now, but they can't really put too much into it. Of course, we see XLE, XOP Energy, USO, UNG, even Nat Gas is participating today. You have gold pretty much flattish, but silver was leading higher. Besides that, you got the VIX, the inverse indicators moving higher. So it is ugly, ugly, ugly. Moving on to commodities. Energy, big gains. So the dip that we got in Energy Monday was an opportunity to buy, as I suggested, by the way. So we see gains north of 4.5% for both WTI and Brent. We see gasoline RBOB up about 2.5%. Diesel, aka heating oil, is the biggest gainer, as we explained in the weekend video, up 5%. Then Nat Gas is participating to up about 3%. Now, you see U.S. involvement and closure of the Strait of Hormuz. You're going to see these prices going significantly higher. Now, we'll look at the soft sedan across the board because the dollar was higher, believe it or not, so energy showed a lot of resiliency today. And I think that metals did a lot of resiliency too, at least gold and copper. With the dollar up about 1%, you should have seen gold flushing down. You should have seen copper flushing down, but they're down fractionally. We actually have seen rallies in silver up about 1.75%, and platinum, palladium moving up about 2% for the day. Grains showing really good degree of resiliency here against the dollar because they're tracking crude oil. They're not really tracking the dollar that much. So we see wheat up about a little over 2%. We see soybean meal and soybeans moving higher. Well, we see soybean oil and corn taking a break. Moving on to the options market, aka the big casino. What do we see here? We see a little bit of the equivalency in the volume. We see a little bit of demand on the puts. So that's the beginning stage of a reversal. You got to remember what I said earlier. Fundamentals, technicals, mechanics. That's what mechanics means. Psychology, but this is mechanics. When we begin to see traders shifting to puts, it's a good sign to bet on a reversal. And the better news is, right now the implied volatility is not really that high. When you look at the IV rank for NVIDIA, that's about 5%. You look at the IV rank for the bigger names like Apple, Tesla, AMD, all under 30. So if you agree that we are in a process of a reversal because of the geopolitics increasing the price of crude oil and the VIX, if that's your bet, then the opportunity to enter puts right now is the best because you get to buy cheap and if volatility moves higher, you get to sell expensive. But unfortunately, the nature of traders, they wait. When the move happens, when it's about to end, then they want to chase it. So you got to use your head here. Moving on to the unusual activities. Let's do the bullish ones first, beginning with the ticker AI. It's a scam company, really, but they love it. So it is hot. Trading at about $24 a piece right now. Somebody's doing diagonal, which is one of my favorite spreads, really. And the idea for diagonal is the main bet is the longer dated one, which is the 25 calls, the expiration date, August 15, 2025. But that's expensive to buy on its own. How do we reduce the entry cost? Well, we sell something that we know will probably end up being loser, so we can capture the credit. Me as a seller, I don't lose, the buyer loses, and I capture the credit. So the bet here is the trader sees AI going higher, but not as high as 28 or above by June 20. They see it maybe later. That's why they sold the 28 calls for June 20 to finance the 25 calls for August 15. All in all, spending about $7 million. Got another big one for you here for a firm. With the consumer broke, they have to use the buy now, pay later, or never. So here we have irregular bull call spread. Somebody bought the 65 calls. They sold the 75 for the same expiration date of July 18. It was a different expiration date. That's what we call diagonal. For the same expiration date, we call it a debit spread, as you see right now. Of course, the stock is trading at about 60, so they're betting for massive gains to come here because they're betting that we're going to go above 65 by the expiration date, but not above 75, which is a pretty decent gain for a stock trading at 60 right now. They spent about $2 million on those. And then we got AMD. Maybe a little bit Johnny-come-lately right now chasing the pop, but who knows? The chart looks good to me, at least for now. If it reverses, if the market gets weaker, we see the VIX popping higher, of course, AMD will be sold too, based on the ETFs. But right now, the chart looks pretty good, I would say. If you want to be long chips, probably AMD is the best choice right now. So somebody bought the 133 calls, the expiration date July 25, 2025. The stock is trading at about 127-ish right now. They spent about $2.5 million. But at the same time, we segued to the bearish trades. Somebody's shorting the SMH, the semiconductor ETF. So again, if you're shorting the SMH, maybe your hedge should be shorter dated calls on AMD. That will balance it if the SMH doesn't go down. If it goes up instead because of AMD and NVIDIA moving higher, at least you got a bet in that direction. You can exit your bearish bet in the SMH and vice versa. If the SMH puts works out, AMD begins to go down, you can close AMD calls and shift your focus to the puts in the SMH. Anyhow, the trader here bought the 240 and the 255 puts for the expiration date August 15th, spending about $6.5 million. And then we got AAPL. This is a big one because Apple is trading at about 200 right now. Somebody bought the 150 puts for the expiration date October 17th, 2025. Spending about $1 million. This is really, really bearish. They see Apple at 150 or below by the expiration date. Then we got a YOLO one for you, but we had to cover it here. It is a bearish one. VIX calls for the expiration date off tomorrow. So they're betting on a war happening right now. They bought the 23.5 and the 24.5 calls. The expiration date June 18, 2025, aka tomorrow. Spending about $900,000. All I got to say is good luck. Apparently for somebody, $900,000 is just spare change. They can do a lot with it. I say good for them. Let's do some charts. We begin with the E-mini futures daily chart. What do we see here? We're about to exit the rising wedge pattern. Maybe consolidating for a little bit, awaiting J. Powell to get a break. The confirmation will be losing and closing below the 200 days moving average. If we do that, then we are in a corrective process, and I expect that we're going to go down at least 5,800, if not below, one step at a time. If you look at the momentum indicators, the MACD, it is rolling over, but it is not the most reliable indicator on its own. You have to combine it with others. So if we do the RSI, we begin to see that we have maybe a negative divergence building on here, which is a sign that momentum is weakening. You combine that with the Vortex indicator, you see your bearish momentum moving higher, your bullish momentum is moving down, and if we have a crossing in the confirmation, then that's all what we need to see to say that we have now entered a bearish phase, as we've seen right here when the market was correcting, and then we got the bullish confirmation right around here as we exited Liberation Day and we went to the month of May. NASDAQ futures looking a little better here, maintaining the rising wedge to a certain degree because the majority of the rally was led by NVIDIA and the tech names. So there's no surprise that the NASDAQ is holding a little better. But the problem that I see here, it could also break down because it led the way up, it will lead the way down. As we see folks dumping the ETFs, the biggest casualty, of course, becomes the big cap technology names. So if that is the case, we could see a big flush and a fast one all the way down to the 200 days moving average in orange, which is in or around 21,000. Looking at the momentum indicators, the MACD rolling over, but again, you have to combine it with the RSI, which we see a little bit here of negative momentum, negative divergence building on, not confirming yet, but if we look at the Vortex indicator, for example, getting close to give us a confirmation that the bearish is about to take over the bullish, and we have a corrective phase. Last time we've seen this was back in February, and indeed we got a correction in the NASDAQ. Your leading indicator, the Russell 2000, already broke below the rising wedge patterns, so if it is saying something, it is saying watch out, the SPY, the S&P, and the Qs will also break below the rising wedge pattern. Where do I see support here in a flush scenario in the IWM? I see it in the 50 days moving average around 2,000 in the Russell futures. If we zoom out, we see that the MACD is now confirming negative momentum. It tried really hard to maintain bullish, but now it's shifting back to bearish. If you look at the RSI, you see maybe bigger negative trend here in the RSI of the Russell 2000. If you look at the Vortex indicator, we're getting closer and closer than any of the other indices for a confirmation that the bearish momentum is about to take over the bullish. So the Russell, once again, remains the leading indicator. We are not going to do the dollar, gold, or we're not going to do also bonds because all of that's going to be dependent on J. Powell. And crude oil, of course, depends on the geopolitics. Right now, it is flaring up. If it continues to heat up, I think that crude is probably going to make it 75 and perhaps begin to knock the door at 80. So that's going to be left to the geopolitics. We'll look at it again in the morning brief in Discord. If there's any update, I'll let you know right away. But looking at some of the heavyweight names like Apple, for example, what do we see here? It failed to cross above 200. This is a massive failure candle. Caught support around 196.5, 195 in certain charts. Doesn't matter which number I look at. It is within that zone. Got a rebound, failed to close above the top of the breakdown candle. So we have a failure in an inverse ABC pattern. But we finally lost 196.5. And now what? I think the next support comes down to 193. You see the reaction right here, close enough. If we continue to go down, I think 193, we'll see how that's going to hold. If it doesn't, then we can talk about further downside to come. But you got to remember, you have this unusual trade with somebody buying the 150 puts for October. So maybe they know something that you and I don't. And Apple is going to begin to flush down really soon. Now, what about NVIDIA? Looking pretty good right now, still within the rising wedge. So the NASDAQ is not going to break without NVIDIA breaking. The SPY is not going to break in a significant manner without NVIDIA breaking down. So NVIDIA is pretty much what's holding the market single-handedly right now. If NVIDIA breaks, say goodbye. And right now we know that the volatility in NVIDIA is really, really low. That's going to attract the traders, the options traders, and they're going to crack it down. If we see more bearishness, we see the VIX moving higher, more bad news, the bears are going to pile in, and we're going to see a break in NVIDIA. But right now it's looking pretty good. But if we zoom out, look at the momentum indicators, bearish momentum beginning to show up here in NVIDIA. If you look at your RSI, it's beginning to show a little bit of negative divergence. If you go to the Vortex indicator, still too early, but you see that we're moving higher here. And the bearish momentum may be losing some of that bullish momentum. So NVIDIA is really, really important. Market is not going to break down without NVIDIA breaking down. Souffle, Tesla, 2 hours chart. What do we see here? Well, we now know that we got a rejection at 333-ish. That's a no-go for now. Got to retest 313.30, the previous higher low. You break below that, then we got a problem. We begin to flush down 300, of course. But my 2 cents would say with the robotaxi event, it might just consolidate here for a little bit until we get the robotaxi event, and it might be, as I'm betting, it could be a sell-off event. Buy the rumor, sell the news. But we see Tesla finally breaking. So this could take a little bit of time. But watch this zone right here, 313. Let's call it 313. You break that, you got to go with the 300 puts. Furthermore, when you look at the moving indicators, I mean the MACD not looking pretty good, barely got positive, now back to negative again, lost all of the momentum right here. So that's telling you that Tesla's probably heading down. You look at your RSI, this one, you can't even do a negative divergence because it barely got an oversold rebound, and now it's heading back to lower relative strength. Relative strength, at the end of the day, is measuring the strength of a chart, and it's saying not that strong, really. And in the Vortex indicator, already got a confirmation with the bearish momentum leading the bullish right now. Last time it was May, the end of May, so we've seen a correction in Tesla. I think right now we continue to accelerate the bearish momentum, that we see the bullish momentum heading down. If we see a major sell-off all the way to 300 or below, before the robotaxi event, and we see this, we see the bearish momentum in the Vortex moving up to these levels right here where we usually top. If you see it going over there before the robotaxi event, then you're probably going to see a positive reaction when the robotaxis are rolled out, absent of an accident or a disaster, of course. But technically speaking, that's going to be the point where you want to exit your bearish bets because you maximize the gains. Time to get out. And lastly, tulips, Bitcoin. What do we do here? Bear flag consolidation, but holding above 104,000, so we can't be mad at it. We'll see what J. Powell does to Bitcoin, but really important period for BTC to be tested. Geopolitics, the Fed. Does it track gold? Does it track the dollar? Does it track risk on assets? I think my 2 cents, we're probably going to break down, lose 104,000, lose the 50 days moving average in blue, and maybe begin to see if 100,000 will be good support or not, because if we expand the chart, it was right around here. So we're probably going to retest that if we head down and close below 104,000. If that doesn't hold, then we got a problem. But I think that 100,000 will be the next support. Look, Bitcoin tried to move higher, tried to challenge the previous highs, couldn't make it, tried again, couldn't make it. So it leads me to think that probably the break is coming to the downside. And lastly, moving on to the conclusion of this video. What do we have on the economic calendar tomorrow? Wednesday the 18th, housing starts, building permits, all important for the housing market, followed by initial jobless claims. But the big event is the FOMC interest rate decision, but more specifically, the conference with Chairman Powell. All eyes will be on Powell because the day after we have a holiday. So it is a good excuse for the market to move up, but with the geopolitical uncertainty, whatever the hell Powell says, that picture could change. But with that, folks, let's wrap up the program. Hope you enjoyed it and you find it informative. But this is all I got for you for now. Thank you for listening. Thank you for watching. I appreciate and love all of you. I'll be talking to you again tomorrow. Good night.
You just want this shit so to escape from reality? Yeah, I don't need this shit. I am reality.